The federal government is cutting back on immigration. That's after record inflows of both permanent and non-permanent residents damage public support for immigration. It's been blamed for housing shortages, for example. The federal government will admit nearly 20% fewer permanent residents next year, and then will admit 4% fewer still annually through 2027. Our guest says this will raise fears, or probably will, among corporate leaders about labour supply. However, the near-term economic setback may not be as big as some fear. We're joined by Randall Bartlett, Senior Canadian Economics Director at Desjardins. Randall, great to see you. Thanks very much for joining us. Just to start off, you say this is a serious move and we're swinging the pendulum from major immigration to a radically lower level.
Oh, absolutely. I mean, what we're seeing now is that the federal government is not only scaling back on temporary residents, so international students and temporary foreign workers, but now on permanent residents as well, which is something that was not part of the plan even on Wednesday. And so now we're seeing that population growth could slow to about 0.2% year over year in 25 and 26 versus the 3% plus growth that we've seen over the last couple of years.
So population growth in the near future is likely to grind nearly to a halt?
That's correct. So in Canada, all of our population growth is pretty much driven by newcomers to Canada, whether that's immigrants or non-permanent residents. And so certainly reducing the pace at which we admit immigrants and then actually having a contraction in net non-permanent residents in Canada is going to lead to growth that's basically flat for the next couple of years. So looking at the economic impact here, you say it could be muted in the sense that it will tend to support wage growth, and also it could bring down shelter inflation, so households will have more to spend. So there could be an economic boost from this, at least in the short term. Well, I think there could be an economic offset from weaker population growth. So the weaker population growth that we're going to see is going to weigh on headline real GDP growth, and we think it's going to be weaker than our current projection, certainly as a result of this change, and much weaker than, say, what the Bank of Canada is forecasting as recently as Wednesday. But there will be offsets to it, and those offsets will come in the form of higher real wage growth in Canada. So that's going to be something that's a positive that'll put more money in people's pockets. We think higher GDP per capita growth is going to result from this, and ultimately higher productivity as well, as companies are more constrained in bringing in temporary labor and are instead forced to invest in labor-saving technologies in order to continue to serve their customers.
And is that a good thing, that companies should be forced to invest in labor-saving? Because, I mean, that's how capitalism is supposed to work, I guess. If labor is expensive, you cut back on your use of that input and you invest more in capital equipment.
Well, I'm not going to opine on the merits of investment versus using temporary labor. I think that coming out of the pandemic in 2022, labor shortages were the highest they'd been on record, and companies had to find a way to address the surging demand that we saw coming out of the pandemic, particularly in industries that were very hard hit during the pandemic. And so temporary labor helped to fill that gap. The federal government eased constraints on bringing in temporary labor to do that. However, that does provide the offset where, then companies don't have the same incentive to invest. And so now I think the federal government is trying to find a better balance between meeting the needs of companies in order to serve their customers, but at the same time ensuring that we're not displacing Canadians in the labor market and that companies don't have a disincentive to invest because they can get access to temporary labor so easily.
I'm looking at a website here called immigration.ca. And the headline is 12 ways you can immigrate to Canada in 2024. Now, they include the refugee program, which is a bit of an outlier. But there seem to be these multiple streams and methods in which people can come to Canada. Is the federal government even in control of this system anymore?
Well, I think the federal government is certainly in control of the permanent resident system. When you look at folks coming through the economic stream or the refugee stream, family reunification, that was the area where the federal government had more control. Where it did lose control was around temporary residents coming into the country. There were, the approval rate. First of all, the demand to come in through the temporary stream, then the approval rate of those requests to come in skyrocketed in 2022 and 2023, whether it was international students or temporary labor. Mm-hmm. And so that's really where they've started clamping down. But our concern around permanent residents coming into the country is that by reducing this number, it really seems to be being done to meet a short-term sort of political need, as opposed to one which is focused on long-term economic growth. And so the reason I mention that is that the economic immigrant stream has been highly successful in Canada, has been lauded and emulated around the world. And certainly we see in terms of economic and labor market outcomes for folks coming through the economic stream are extremely positive. And our concern is that they might be throwing the baby out with the bathwater on this to meet a short-term political consideration. They're actually going to be jeopardizing long-term economic growth in Canada. And so we think the focus should continue to remain on the temporary foreign worker and international student stream, and that there should be a significant bias toward bringing in economic immigrants to Canada.
When you say the emphasis on the temporary and the students keeping those numbers under control.
That's it. That's it. I think, all of the actors, or generally many of the actors in play here, had, the incentives were really misaligned, whether it was colleges and universities across the country that were using, international students to backfill revenues that they weren't getting from various levels of government, or whether it was companies that needed to meet a short-term demand and were uncertain as to what that longer-term demand looked like, and so needed temporary labor to do that. So from the most part, everybody was acting in their own best interest, but collectively that led to unintended consequences, and that's what these measures are meant to address.
Randall, thank you very much indeed.
My pleasure. Thanks so much for having me.
Randall Bartlett.